Welcome, traders, to another Tickmill trading update with me, Patrick Munley. Three instruments I want to look at today where I see potential opportunities developing as we head into the holiday weekend or certainly into the beginning of next week. And we're going to start here looking at gold. This is the spot gold price. And areas of interest for me now are only closed through 2200. We'll complete a potential triangle here, looking for a break to retest the prior cycle highs into 2221. And as this 2200 acts as support, we look for a further upside extension to 2240s. And again, then, as the prior cycle highs at 2220s act as support, we have an equality objective on the weekly time frame here versus 1806 swing low, which gives us an upside objective of 2269. Now, if we don't get the close through 2200, then we could see a three-wave corrective move develop here to just take out these current lows at 2140s, and 2135 is the area I'll be watching there. That will be the equality objective versus this current swing structure. Again, from there, same idea, looking for bullish reversal patterns to engage on the long side with the same upside objective in mind. At this stage, it would really take a close back through the 2130s to take us back in to look at 2115 and 2095 as the next downside objectives. Moving to Nvidia, and we have a continued push to the upside. Yesterday, we did get a potential bullish reversal candle here that took out the five-day volume weighted average price to the downside on a closing basis, but we look set in the pre-market here to open above yesterday's close at at $925, which would suggest that we have the potential here to take a look and break the prior cycle highs at 971. Now, the area that I'm going to be paying really close attention to is the monthly projected range resistance just above the $1,000 mark. We have the 127 extension of our current corrective phase, 1011. Weekly R2, 1000, also at 1011, and weekly projected range resistance, 1016. Note, we also have momentum divergence in play. So if we do make that new high without correcting further to the downside, I'll certainly be watching for bearish reversal patterns there on that first test above the $1,000 level. More likely than not, we could see some profit taking there. And so I'd be looking to play that on the short side, looking for a move back down into the high volume area here at 886. The alternative scenario is that we lose this pre-market strength and actually get a corrective wave that takes us into versus the 967 would give us 835, where once again I'll be watching for bullish reversal patterns to engage on the long side with that same upside objective in mind and that same trading strategy to play on the short side into that initial test above the $1,000 level. I'll wrap things up here looking at the S&P 500 cash market, SPX, and we can see here that we have a potential correction in play at the moment anyway, versus the 52.45 swing high. I'm looking for a double correction to play out. So as we maintain resistance into any test of the 52.30s today, watch for another leg to the downside to just poke below the 5200 level. We have daily projected range resistance. We have the trend channel support. We also have the value area high of the 4-hour profile here, all coming in just below. So 5190s, watch for bullish reversal patterns there. From there, I want to look to engage on the long side, looking for the next upside objective to be tested towards the 5300 level is the game plan there. At this stage, we'd really need to take out 5169 on the downside to suggest further weakness is likely. 5130s then in to take a look at the 5100 level would be the game plan there. But for now, we're watching for that test just to poke below the 5200 to then target 5300 on the upside. As always, traders, plan the trade the plan. Most importantly, manage your risk. Until next time, thanks very much.